So let's talk a little bit today about the different ways that you can finance construction equipment and the pros and cons of each. The first way that you could consider is paying cash. But the problem is most companies in construction don't just have, $30,000 or $60,000 lying around every time they want to buy a new digger or a bulldozer or whatever. The other thing about paying cash is it's not always the best use of your funds, even if you do have the cash. So let's talk about three different ways that you can finance equipment and give you the pros and the cons of each. The first is getting a bank loan, and that's the best. If you can get a bank loan or bank equipment leasing as well, that's going to be your cheapest option. The reason why companies like ours are in business is usually the bank isn't going to say yes. It's not that you're a bad business, but typically with a bank, because they're limited as to how high of an interest rate they could charge, they have to determine, can they charge a high enough interest rate to compensate for the risk for lending to a small business. And part of that is, if you're buying a $20,000 used Bobcat or a $40,000 used trencher, they're simply not going to make enough interest to cover, if they do 1,000 loans and 100 of the people that they lend the money to don't end up being able to pay. They've got to finance that risk, and there's just not enough going around. So the bank typically doesn't like to lend below $100,000. They don't like to lend to companies that aren't doing, $1 million or $3 million in revenue. So that leaves you with two options. You can do an equipment loan or an equipment lease, and they can both be put together by an equipment leasing company. A couple of differences. With an equipment loan, you are going to pay a little bit more than equipment lease, but at the end, you don't have to pay a residual to keep the equipment. On a lease, you're going to pay a little bit less, but at the end, depending on how the deal's structured, usually, like let's say you buy a $50,000 piece of equipment for 4 years, and after you make your last payment, you may have to pay a 10% residual, meaning $5,000 if you want to keep the equipment, or if you don't want to keep the equipment, you just give it back. And leasing tends to be better from a tax standpoint, but it depends. Every situation is different. So it's really good to look at, do you want to take, for instance, Section 179 says on a loan, you can deduct the first $25,000 of the purchase price up front. Well, if you're a new business, you probably don't want to do that, because maybe you're not going to have a bunch of profit this year and you're going to have a pretty low tax rate, but next year and the year after that, you're going to have a high tax rate because you're going to be super successful, make a bunch of money. So then a lease is better. But there's more information on our blog post if you're currently on the website. If you're viewing this on YouTube, there's a link below to go to our blog post that talks a little bit about the pros and cons of the different types of equipment leasing and different ways to finance construction equipment. So I hope this was helpful.